whatever your view is about the data opportunity, the critical question from an investor's point of view is, will telecom operators achieve the return on invested capital, or will it be a case of telecom operators doing the investment and other operators reaping the rewards? And that is a key consideration for the industry. If we put together the discussion of earlier this morning, and we saw some divergent views, is the glass half full, is the glass half empty? One objective way of looking at the picture is by looking at the financials. And I'll briefly explain what we're doing here. We're looking at the Western European PTTs separate to the Middle East and African PTTs. And we're doing the same thing for wireless. And it's pretty clear across the board that there are revenue headwinds, but regardless of where you are, there are margin pressures. We talked about CapEx, and I've put some CapEx levels here. We're talking about investment requirements of around 15% of revenues. That is pretty significant when your top line is either declining or it's flat. If we move on to EBITDA growth, you see that because of the margin contraction, actually there's even more pressure on EBITDA growth for the industry as a whole. So what is the net result of all of that? Well, the net result we can look at by looking at valuation. If we have a look at the share price performance of the industry over a 5-year period, or quite frankly, you can pick a 3-year period, and you'll get the same answer. In terms of share price performance, the industry, I think it's fair to say it's been lackluster. Obviously, the exceptions to what I'm talking about here are Middle East, Africa, wireless, and there certainly is growth, certainly is potential. The key question there is, will the Middle East operators follow the European operators, or as we heard earlier today, are there structural differences, for example, regulation, competition, which means they won't head in that direction, or certainly they won't head in that direction as quickly. My personal view is that as far as the incumbent operators, they're principally already there. And certainly I agree with the point that regulation and the structure of the markets can sustain their positions. We talked about share price performance. I want to also point out that these are actually share price performance from the screen. They don't factor dividends, so it's not a reflection of total shareholder return. But if we turn our attention to dividends, and there was a question posed by Kai earlier today, why are the yields in the industry so high? And looked at on an average basis, we're looking at 7, 8, 9%, and there are outliers. Portugal Telecom is having a yield of 16%. There were other data points. I will make a couple of comments. Firstly, telcos are here to stay. They're stable cash generators. They're a key part of national infrastructure. They're cash generative. The second thing that I would say is, if you look at the chart on the right-hand side, 1 unit of EBITDA for a telco company has never been valued more lowly than it is valued today. We're certainly at the bottom point in the cycle, and I think that's a reflection of the operational trends that are highlighted, and it's a reflection of where the financials are headed. One other observation, when people talk about telcos being utility-like, we've done an analysis, and as far as the cash conversion and the cash flow is concerned, that is certainly the case, but actually telcos today do not have the same defensive characteristics of utilities, and that's why we're seeing telcos valued less than we're seeing utilities valued. Now, if the strategic questions that were posed and discussed this morning are addressed in favor of the telcos, you'll see that balance reverting. So moving on to the key question, what sort of activity are we seeing given the backdrop that I've talked about, the operational backdrop, the financial backdrop? Today, what we're seeing deal activity is being shaped by market realities. We're seeing a greater appreciation of economic, capital market, and operating factors to a greater extent that we've seen in the past. And there's really 5 buckets that I wanted to use to describe current activity and activity going forward. And the first one is portfolio rationalization. We're seeing our clients, telco operators, ask themselves difficult questions. Are we the right owners of this asset? Do we have the right level of control? Is the business value, cash flow accretive to us? And there are many instances where some or all of those questions have been answered in the negative, and we've seen France Telecom, we've seen Vodafone divest assets. Now, this isn't a trend that we've seen historically. This is a trend that we're seeing now because of the market realities that we're faced with. And our view is that we'll see other operators taking a hard look at their portfolio and changing the mix and the balance of that portfolio. The second topic, this has been extensively discussed for years and years, which is synergy-driven transactions. They're obvious, but there are also challenges. One of the challenges is control, who gives up control. The other challenge is the free rider issue. If you're initiating, if you're taking the risk to consolidate a market, others are free riding on that. Nevertheless, we have seen this again driven by market realities in the UK market. We saw T-Mobile and Orange come together, very challenged market. My personal favourite example is actually Sierra Leone in Africa. In that market, at one point in time, all 5 operators were up for sale. That's how difficult the market was. Millicom, who's got a very core focus on Africa, decided to exit Africa. So an example of the first type of transaction, and that market started consolidation. Why do I like that market? Africa is ripe for consolidation. There are just too many licenses, too many operators. That's the only notable example I can think of today. We're expecting that to happen more, again, driven by some of the realities that I've been talking about. The third bucket of M&A transactions is sort of the classical expansion, which is still important. Operators are starved of growth in the domestic markets. They're looking for accretive opportunities. The challenge there is assets are becoming scarce. Valuation levels are holding up because assets are scarce. And the way to get those sort of deals done in today's environment is to be bold, to be creative, and to engineer transactions. And some of the examples there certainly fit this profile. Complementary infrastructure acquisitions, Vodafone acquiring Cable and Wireless, that's the sort of deal I'm talking about. And then finally, value crystallization transactions from operating assets. The best example here is towers transactions. There's a very clear, compelling logic, and in my view, this is a pervasive reality. We're seeing a new industry, the tower industry, taking a real strong foothold, especially in the emerging markets. Obviously, it happened in developed markets for some time. We're heading in that direction. We've done a lot of work with the likes of NTN, with Millicom, with Indosat. There are very significant big players that have accepted this particular trend and the need for transactions. Again, I keep going back to the realities that operators are faced with and the challenges. And it's these sort of transactions that will become even more important going forward. I'm conscious that I probably don't have a huge amount of time, so the next few slides I'll try and move through quite quickly. This chart represents the deal volume going back 3.5 years, so back to 2009. And you'll see from 2010, M&A deal volume globally dropped almost 50%. This year, if you annualize the activity today, we're looking at another significant drop. And quite frankly, it's not hugely surprising. There are macro factors, and I'll come on to those, but sticking specifically with the dynamics within our industry. I talked about earlier about assets becoming scarce. If there's no assets to buy, clearly there's an impact on deal volume. Deals are being generated on the back of very difficult decisions. It's not easy to say, I'm going to sell assets X, Y, Z from my portfolio. So So each of these difficult decisions in market consolidation can result in another difficult decision. I think you will see some friction and some slowness in those deals getting away. That's not to say they won't get away. I think they will, but that contributes to the slowdown. Of course, this is a regulated industry. We saw with Deutsche Telekom's attempt to offload its US business, that struck regulatory hurdles. That is another impediment that's reflected here. And then we talked about towers deals, they're complex transactions, they're operationally very significant. Again, it's no surprising that there has been a slowdown. The question is, what is the outlook on M&A? And I've already alluded to that. My expectation is, whilst there is a slowdown, there are still types of deals which are absolutely necessary. But taking a slightly more general view, and this of course can also be applied to telcos, we sort of come back full circle. I started off talking about the macro situation, the political situation playing a key part, and this slide sort of illustrates that. If we look at M&A deal volume, we've seen that M&A tends to lag a recovery in the broader economy by 9 months back in 2009. This year we had a good start to the year. Yesterday the Dow Jones hit a 4-year high, and we're expecting deal activity to pick up on the back of that. I'm going to end my presentation with a bit of a caveat to that bright horizon, or the bright outlook as far as M&A is concerned. And let me do that by first describing this chart to you. And that is to say, what we've done is we've looked at the previous trough to peak movement in the markets, and that was April 2003 through July 2007. And we've said, let's compare that trough to peak period with the current period, going back to the trough of 2009. And we've set the current period, which is the red line, against what we saw back in 2003. And you'll see that for the first 2 years, there's a very strong correlation between the two. So M&A activity picked up fairly significantly. And beyond the first 2 years, we're already seeing a divergence. So on the one hand, I've talked about the outlook for M&A being positive. On the other hand, I'm spelling out this divergence, and this is the caveat. We're in extremely complex times, complex in the industry, complex in terms of financial markets, complex in terms of the equity markets. And this makes it all the more important. Those deals that are absolutely necessary to do the right deals, to do the smart deals. And I won't end my